What a dope. What it dope. It's Decrypt back with another video. Today, I'm going to teach you guys what a fair value gap is. If you guys don't know what a fair value gap is, you've probably been living under a rock. That, or I don't know. Anyways, what is a fair value gap? You probably have heard this term before. You don't understand what it is. You don't know what it looks like. Well, here we have a bullish and a bearish fair value gap, right? So these fair value gaps are different. No, I'm joking. So, all right, let's get serious. But we're going to be learning fair value gaps. They are simply displacements. What is a displacement? Well, a displacement in volume is when either buyers or sellers are outweighing each other, right? So, in a bullish scenario, in a bullish fair value gap scenario, you're going to have buyers outweighing sellers, which is going to create this displacement on the chart. So now just imagine putting orders in. So like we have orders here. We have like 1,000 sell orders of a stock. And then we have like, I don't know, 50 buy orders. Okay. Which one outweighs each other? 1,000 or 50? That's basically all it is. We have more buyers than sellers, or we have more sellers than buyers, because everything is all volume, and everything that you see on the chart is just a visual representation of people buying or selling. And this displacement right here, a bullish or a bearish fair value gap, is people outweighing each other to the upside or the downside. And that's all it is. So whenever you have a fair value gap present itself, that's how you know there is volume. That's where the majority of the orders are going to be at, whether it is to the upside or the downside. Now, that being said, once you start tying in all these simple things together, because once we get past the charts, all it is psychology, risk management, all these different things, and then you're immediately a better day trader. Just off rip. You're going to be better than 99.99% of day traders never actually become successful. Well, you guys are about to become the 1%, because with this information, I myself have made over $1 million day trading. So if I can do this using this information, you can do it too. Okay? Millions off of fair value gap. Can you believe that? Yes, I do. Okay? Now, I don't know what that was. Anyways, fair value gaps. So far what I've taught you guys is how to mark your highs and lows on larger time frames, how to mark highs and lows in general, what are levels, what are trends, break of structures. We know how to read a trending market now. We know what a break of structure is. We know what breaking levels are. We know what highs and lows are. We know that highs are where a lot of sellers are at, and we know that lows are where a lot of buyers are at, right? Now, let's start combining everything that we know and using these tools to help us find ways to take trades in this market. Because once you understand these concepts, you can start making decisions based off how these tools work: fair value gap, levels, trends, break of structures, highs and lows. let's see how we can use these to our advantage. Okay. Now remember, this is about fair value gaps. We're just going to start tying everything in together so that way we know what we're doing. Okay. So let's go to 2022. I'm going to use 2022 as an example because it's honestly just, it looks better than everything else so far, right? And it's just easier to teach on. Anyways, bang. 2022, we understood that interest rates were being, they're going higher, right? So everything was getting cheaper and it was harder to get money, whatever, yada, yada, yada. Well, at the bottom in October in 2020, throughout October, from October 2022 all the way through 2024, we're looking to reverse and break highs because we're downtrending, right? So if we start marking all our previous highs, like so, boom. Let me get rid of this. It's easier to read the chart like this. Bang. We go back. And then we also have all these equal highs down here on smaller time frames on the 1 day. Yeah. So we have all these levels here. Boom. And then we have these highs as well. So we can mark these highs. And normally, so I get this question a lot. You have this high, this high, this high, this high. They're not all equal. You have these two that are very similar. Normally, what I try to do is just find the median because it's not going to be perfect, but you know that, you see all the choppiness here. You see this high, you see these highs, this high, you see this gap here. So honestly, this right here would be perfectly fine. I'm only looking at the left side of my screen, so I'm not going to cheat and be like, oh, look how well it retested. I just think this would be the best level because if I go backwards like this, we can't even see it, right? We're just marking previous highs. I think that's a good median, right? We have these highs, we have these highs, but I think this is a good median. If I go back on the weekly, we want to wait for those highs to be broken, right? Because we want to get out of a downtrend. Now, remember, we know that every high and low are buyers and sellers. So at every high, you have sellers, right? If we have sellers here, what's going to happen when we approach this? Price is probably going to continue to sell off, right? Well, what happens when you rip through a previous sell-off level with a fair value gap? And what does a fair value gap represent? Buyers outweighing sellers. So if we're no longer selling off here, we break through these levels with a fair value gap. Obviously, this is on the weekly time frame, so it's going to take a lot longer to play out, which it did. It took almost an entire year. But this is just an example to show you how we're going to start tying everything in together. So we have the downtrend, we have a break of structure here. Boom. We have our reversals, we have our lower highs. We have our fair value gap on the weekly. Boom. Weekly fair value gap. All we have to do now is target previous highs because this is the next previous sell-off level. This is the last largest sell-off level. So now that we're above this and we know that we're no longer selling off there, we can confidently use this fair value gap as an entry and target to our next level, like so. Boom. So this would be our trade. We're looking to get a retracement to our fair value gap. Whenever that is. And notice how we sold off at that previous level. We never broke through it, but once you start breaking levels, you can start expecting a reversal. And anywhere in between the fair value gap and the previous high, because this would be a swing trade, is where you'd want to start entering. So normally, I'll probably start entering around here, 431. and average in all the way down to 425. Stop loss halfway through the fair value gap. In this case, we start retesting. We never get a candle close. Let's see if we get a candle close. Faked that a couple times, but ultimately ended up climbing higher, right? So we zoom in, go back down into these highs. You can see that these highs would have been the previous highs, right? So even in the back testing, it's like it's not going to be extremely accurate. But overall, understanding the market's going to continue going higher, it's going to help you gauge where you want to take those trades and what area or what areas, sorry. All right. And this is on the weekly, larger time frames. The wicks, the movement's going to be a lot crazier, but the concept still applies. So I'm showing you on larger time frames. We're not going to be taking crazy swing trades. We're not going to be taking one trade a year. We want to learn how to day trade. So now let me show you how you're going to do that. Okay. So let's go to recent times and I'm going to show you. Remember what I told you guys in the very beginning. When you're trending towards the top right corner of your screen, what direction has price been climbing? This is a daily chart. What direction has price been climbing? To the top right corner of my screen. So which direction do you think that I'd want to be trading? Am I trading an uptrend or am I trading a downtrend? It's that simple. Self-explanatory. It's not rocket science. Buyers are present. We want to trade the upside. So currently we're at all-time highs. We just retested 2022 highs last 4 months. I keep marking the same highs. Let me get rid of all these. There we go. Okay. So now when we're looking for trends, it's like we broke out this high. We broke out all-time highs. There's a reversal going on. Even on smaller time frames, you can look for reversals to take these trades, right? We know this is previous highs. Buyers broke through here with volume, obviously, because that's no longer a sell-off level where we sold off at. Buyers presented themselves. We started making new highs. Once we start breaking structures here, because you have a downtrend even on smaller time frames, once you start breaking these previous highs with fair value gaps, that's where you want to take your trade. And then you just target either the gap or previous highs, right? So your trade would be there. Boom. So you always want to be looking for the upside trend or the upside trade whenever you're trending to the upside overall. Just because you're on smaller time frames, I see a lot of people make the mistake of, oh, yes, you can take trades to the downside. Don't get me wrong. Like here, for example, downtrending, right? So on smaller time frames, if you're downtrending for the day, you might want to, just take a quick scalp to the downside. You don't necessarily have to wait on larger time frames for you to take a trade. Now we're downtrending, right? So overall sentiment, we might be retesting previous highs. So yes, in scenarios like this, you can take downside trades if there's no upside trades present. I know a lot of people, including myself, who just tend to stay away. I don't like trading the downside. I'd rather wait for the upside move because it's going to be a lot larger, and I'd rather put more into one trade that I'm more confident in than one where I don't know necessarily where it's going to bounce at, right? So because I don't know where buyers are going to step in at. But if you were to take a trade to the downside, it would be the same concept. You're waiting for these levels to be broken with a fair value gap. A fair value gap is going to show you that there's volume. The fair value gap is always going to show you where the volume's at, also where the most orders are at, because that's where sellers are outweighing buyers. I always set my stop loss to halfway to the fair value gap, and all I simply do is target previous lows. Same way I would target previous highs, and that's your trade there. Boom. That is a fair value gap. So we're going to continue moving on. This is a fair value gap. This might be a short episode. I don't know how long this video is, but I hope I explained it to the best of my ability and you guys are learning more and more and more. I want you guys to document your process. Message me on Instagram, show me you're watching the videos, tag me, I'll repost it. This information is going to teach you and possibly change a lot of your guys' lives. I guarantee it, because this actually works. You're going to see this happen time and time and time again. You're going to become more comfortable day trading and you're going to become even more successful. So take it seriously, guys. I really hope one of you actually can make more money than I did. Shit, you know, it's like, that's what I would want. That'd be sick. But yeah, I'm excited. I'm excited for you guys because I'm going to keep posting every single day. I want you guys to pay attention to these. Like I said, tag me, follow me on Instagram, message me. I want to be there throughout your entire process. I want to be able to see you become successful in real time. Like I'm rooting for every single one of you guys, deadass. Because I remember when I was day trading, people don't understand how lonely it gets. And whenever you're struggling, losing, the mental battle is absolutely ridiculous. It's always an uphill climb, no matter how many wins you have, you know, and the losses make it even worse, especially when you go online and see all these people winning, da da da, you know, the psychological part of it's really difficult. But like I said, I'm here for you guys. Let's keep working. Let's keep grinding. I want you guys to get rich as balls. It's been Decrypt. I'm out of here. You guys take care. Deuces.